Okay, so welcome to Millionaire Incorporated Forex Basics Trading Course, Module 2 on Charting, Part 3 on Support and Resistance and Trend Lines. So what we're going to cover in this part is what is support and what is resistance, how to draw support and resistance lines, what is a trend line, and how to draw trend lines. So with market structure, you'll often see price moving in a certain direction, stop or pause, then change direction for a retrace. These are where it creates its highs and lows, and they typically occur at areas of what we call support or resistance. So an area is considered resistance if price action is coming up to a certain point, has trouble breaking through it, and support is if a price is coming down to a certain area and has trouble going lower. So if a price is racing up towards a certain price and then retraces from that same price, we call this area an area of resistance because it is having difficulty breaking through that area. One way to think about it is if you're trying to push against a brick wall, it's going to resist your efforts to push through it. So this is what we call resistance. Conversely, if price comes down to a price area and rebounds up from the same area, this is what we call support. And you can think of this as if you're leaning against a solid wall with your back, and it's going to support your weight, and you can lean there for a while. So we're looking for areas where price kind of comes down to and bounces off of over time. So if the price comes back up to, let's say, a resistance area, it's a pretty safe bet that it will respect this area and move away again. And if it's an area where price has come up to and resisted several times, or come down to and is being supported several times, and hasn't broken through those areas, it means that those areas are actually pretty strong resistance and support areas, and similar thing, it's most likely not going to go through that area. Support and resistance lines can be drawn as horizontal lines, and you're looking for areas where either prices come up to and rejected or come down to and rebounded. So these can be drawn all time frames, but as you go to higher time frames, the support and resistance areas are a lot stronger. So let's take a look at a quick graph I just drew up before. So as you can see on the left side of this graph, we have areas of support. So as you can see, price is coming down to and hitting this area, then kind of rebounding up higher again. And it's doing this multiple times. So get my mouse on here. You can see rebounds from there once, twice. But the third time it comes down to it, it actually breaks through. And then as it comes back up, it actually rejects off it. So that's now what we consider resistance. And what you'll often find as well is if it actually breaks or creates a support, or breaks a support, or it will come back up and be resisted in that same area. So support can be sometimes thought of becoming resistance if it's respected. So that's what's kind of happening in this diagram here. So let's jump over to an actual graph, and we'll actually start drawing in some support and resistance lines because it's something very important to learn. Okay, so let's take a look at the Aussie CAD chart here on the daily time frame, and let's try and draw a couple support and resistance areas just looking at this chart. So come up here to grab the tool which is for a horizontal line, which will be our support or resistance line. And let's start off by looking for areas of support. So as we said, support is areas where the prices come down to and not being able to continue down further and move higher. So a pretty clear and obvious one is just around this area right here. So you just want to click here and draw that trend line in. So you can also, the support line in, sorry. And you can also change how thick that is. I'll make it a little bit thicker so you can see a bit clearer. And as I was saying earlier on, or as you'll probably learn as well, sometimes the price can actually pass through it and still be considered a valid support or resistance line, as price hasn't broken all the way through and held. So you can see the price has kind of come back up here and then tested again a couple more times, then moved up a little bit higher. Now let's look for an area of resistance. So remember, that's where price has struggled breaking above. So one area where that is, or we can draw that, would be around about here. So you can see the price has kind of come up to, as we said earlier on, it can kind of pass through but still hold and be valid. Then as it came up to that area again, it's kind of struggled passing through and kind of came back down again. And as you were saying before, how support can become resistance, if you look left, you can also see how that area, which is now a resistance, was once a support area, and it kind of wicked into that area, then moved higher again quite significantly. Then as it came back down, touched it a few times before it actually finally broke through. So let's try find another area so we can draw our support and resistance areas. So if you come over here, you can actually see this price here has kind of come down, moved higher, come down, moved higher, then moved lower again afterwards. So this area here, about right there, will probably be a very good area of resistance. So you can see there how price has come up to and moved back lower quite significantly. And it's done that multiple times. So that is a very strong area of resistance. We can also use diagonal lines as a means of drawing support or resistance, and these are called trend lines. So this can be used to help identify a trend, and these lines can also act as a support or resistance area as price comes back to it. But there are some rules to these when drawing them. So on an uptrend, what we are connecting are higher lows as it trends upwards, and for a downtrend we're connecting lower highs. And breaks of these trend lines can also be used to determine if the trend has changed. Now the trend line is usually drawn by connecting the bottom or tops of the wicks, but not always. So if it's in an uptrend, you're connecting the bottoms of the wicks of the higher lows, and downtrend connecting the wicks of the lower highs. But as I said, it's not always going to be this clear. So you'll find that sometimes it's better to draw at the base or top of the body of the candle, depending on what makes a clearer trend line. This is because price can move through the line, either above or below, and still be considered a valid trend line. And the same thing goes with support and resistance lines. There is no hard and fast explicit rule to what is 100% correct, and over time you'll get better at drawing these trend lines and support or resistance lines. They do take practice and experience to master, so being able to actually do this over time is a skill to learn and master. So as you can see here, we've got the uptrend. So what we were doing is connecting the higher lows as we're trending upwards. So that's the first higher low, then we've got the second to confirm it, and then we connect it to the third one, and as you can see, it gets respected and shoots off again. And for a downtrend, similar thing. We've got the higher low here, the high. We've got a series of lower highs here, which we connect, and the third time it comes up to this trend line, it actually drops down afterwards again, and that's confirming. So the first peak, the second is confirming the trend line, and the third touch is where we can actually trade from. So let's try drawing some trend lines on our chart now. So let's go back to the Aussie CAD chart on the daily time frame, and we'll grab our trend line tool over here, and you can see here how the price of the Aussie CAD has actually moved lower over time. Now, if you remember from market structure, what we were saying before, a downtrend is where it's created lower highs and lower lows. So you can see there, you got the high, lower low, lower high, lower low, lower high, lower low, and it's kind of created that zigzag pattern on the way down. So we'll start from here where it starts that downtrend. You just want to click on the top of that wick of that candle there, and you just want to connect a few of these points there. So as you can see, it's moved lower, came up, tested or created these lower high there, and then moved lower again. So that's where we create the confirmation of that trend. Then the third time it comes up to, touches it, it moves lower again, comes back up, a couple of near misses here. Then another time as it comes up, it kind of passes through, but it still holds. As you can see, price hasn't completely pushed through it. And after that, it just moved all the way down again. Then as it came up another fourth time or fifth time, it's kind of tested it, dropped down, and then broken through again. And created a changes in direction of that price. So that's how you draw a trend line on a downtrend, and the inverse would be true for an uptrend. So that's the end of this section. Stick around for the next part.